Let me ask you a question that I think most people in finance get wrong. Is strategy just Bitcoin with depth? Because if the answer is yes, then the investment case is simple. You think Bitcoin goes up, you buy strategy. It's a leveraged Bitcoin ETF with a complicated balance sheet attached to it. So this is over. But if the answer is no, or even mostly no, then something much more interesting is happening. And right now, with markets in full turmoil, with strategy down 72% from the November peak, with tariffs escalating and every asset class selling off simultaneously, right now is exactly when understanding the real answer matters most. Because the time to do your homework on asset is not when it's going up and everyone's excited. It's when it's going down and everyone's scared. So let's get into it. What is strategy actually? What are you buying when you buy it? And what does the current market turmoil tell us about where we are in the story? Let's start with a simple answer, because there's the truth in it. Yes, strategy stock price is almost entirely driven by Bitcoin. The correlation is close to 1. When Bitcoin goes up 10%, strategy tends to go up 30 or 40%. When Bitcoin falls, strategy falls harder. The beta on this stock is about 3. That means it amplifies the broader market by a factor of 3. And it amplifies Bitcoin's move even more than that. So in terms of what moves the price day to day, week to week, it is functionally and leverage Bitcoin instrument. If you're trading at short time frames, that's all you need to understand. But here's where the simple answer breaks down. A leveraged Bitcoin ETF, a BIDO or ProShare product, is a passive vehicle. It holds futures contracts or spot Bitcoin and track the price. It has no strategic intent. It can't grow. It can't compound. It can't do anything except follow Bitcoin up and down. Strategy is something categorically different. It is an operating company with a deliberate, systematic strategy to grow the amount of Bitcoin it holds per share over time. And it uses the capital market to do it. Let me explain how that works, because this is the key to understanding the whole thesis. Strategy holds approximately 717,000 Bitcoin. That's about 3.4% of all Bitcoin that will ever exist. They bought it at an average cost of around 66,400 per coin. So at currently Bitcoin prices, the portfolio is roughly break even on cost, with significant portions bought above at 90,000 in late 2024 that are currently underwater. So now here's the critical question. Why does the stock trade at a premium to the value of the Bitcoin it holds? At the November peak, strategy market cap was roughly 3 times the value of its Bitcoin, meaning investors were paying $3 for every $1 of Bitcoin on the balance sheet. So right now, that premium, it's called the MNAV, is about 1.15 times. It's almost in parity. The reason investors have historically paid a premium is the BTC yield mechanism. So here's how that works. As long as strategy's stock trades above the value of its Bitcoin's holding, the company can issue new equity, sell new shares, and use those proceeds to buy more Bitcoin. Each time it does this accretively, the amount of Bitcoin that each existing share represents goes up. In 2024, they grew Bitcoin per share by 74%. In 2025, it was 22.8%. The compounding effect is what justifies a premium to NAV. Think of it this way. A standard Bitcoin ETF always holds exactly the same Bitcoin per share. Strategy is designed to hold more Bitcoin per share over time. If you believe in the long-term Bitcoin thesis, that distinction is enormous value over a decade. And the arbitrage only works while the premium exists. If strategy trades at or below its Bitcoin NAV, if the MNAV falls to 1 or below, the flywheel stops. The company can no longer issue equity to buy Bitcoin accretively. The compounding engine stalls. That's the first thing to watch right now. MNAV at 1.15 is not at crisis level, but it has fallen from 3 times to 1.15. The trend is important. Now let's talk about the part most bulls skip. Strategy has approximately $8.2 million of convertible notes. Debt that matures in tranches between 2026 to 2030. These are not equity, they are obligations. If Bitcoin is at or above the conversion price when these notes mature, holders convert the equity and the debt disappears without a cash payment. Problem is solved. But if Bitcoin is below those levels at maturity, strategy faces a refinance event. They either need to raise new debt, sell Bitcoin at whatever the market price is, or issue equity at potentially disadvantaged prices. That's the tail risk. It's not imminent, but it's real. And anyone who tells you otherwise is not being straight with you. On top of the convertible notes, the company has issued a series of preferred stocks. These carry fixed dividend obligations of 8 to 10%. And here's the detail that flew under the radar. Approximately 80% of these preferred shares are held by retail investors, retail yield seekers, not institutional Bitcoin thesis holders. In a prolonged bear market, that creates a specific kind of selling pressure that is different from what you see in the common equity. Now, the thing that makes the debt manageable, and this is underappreciated, it's the software business. Most people value the enterprise analytic business at exactly 0 when thinking about strategy. But strategy has been an enterprise software for 35 years. They generate roughly $490 to $510 million a year in software revenue. Subscription service grew over 60% in 2025. Their product strategy, Mosaic, is an AI-powered data governance layer that sits across any cloud and any analytic tool. Not a revolutionary business, but it's a real one. And with real cash flow that service the company's debt obligation independently of what Bitcoin does on any given day. The distinction is the difference of a company that survives a Bitcoin winter and one that doesn't. So now let's connect this to what's actually happening in the market right now. Because the macro context isn't background noise for strategy, it's everything. We are in a full risk-off environment. Auto tariffs just went up 25% effective April the 3rd. The S&P is down over 10% from the February highs. Bonds are selling. Gold sells off sharply. Everything that's supposed to protect you in a downturn sold off simultaneously, which tells you that this isn't a normal rotation, it's a liquidity contraction. In that environment, capital flows in a very specific sequence. Liquidity moves first, bonds, short-term duration instruments, then equity stabilizes, then risk assets get a bit, and then at the very end of the sequence, the most speculative, most volatile assets get flow. Strategy sits at the end of that chain. That means that strategy doesn't recover when bonds stabilize. It recovers when bonds stabilize, then equity stabilize, then Bitcoin stabilizes, and then institutional money starts moving back into leveraged crypto proxies. It's the last domino, which is why the drawdown is as severe as it is. Now here's what I'm actually watching on the charts. The volume structure at strategy right now shows something called coiled compression at 81%. That means after 300 bars, a bear swing and a 72% drawdown. The volume has compressed to near maximum. The daily range has been compressed, as you see here in the chart. The market is storing energy. The coiled compression is not a buy signal, it is a setup signal. It tells you that a large, decisive directional move is approaching. The regime, which is still bearish, tells you the probability waiting on direction. And right now the regime is still pointing down. What I'm watching for specifically is the Bitcoin needs to reclaim its volume weighted average price around 72,000. When that happens, not if it happens, the Cantillon sequence begins to shift. And when the sequence reaches strategy, you will see it in the volume structure before you see it in the price. So let me bring this all together and give you a clear answer to the question we started with. Is strategy just a Bitcoin with debt? No, but the leverage is real. And you need to understand exactly what you are holding. When you hold strategy, you're buying 4 things simultaneously. First, a leveraged Bitcoin position. The stock amplifies Bitcoin's moves by 3 to 4 times. If you want a Bitcoin exposure without the leverage, buy Bitcoin. Strategy is for those who want amplified upside and who understand that means amplified downside too. Second, a BTC yield compounding machine. As long as the MNAV premium exists and the capital market cooperate, strategy can grow Bitcoin per share over time. That compounding over a decade is worth a premium to spot Bitcoin. At 1.15 MNAV today, you are paying almost nothing for it. Third, a debt structure with tail risk. The convertible notes are manageable if Bitcoin holds. They become problem if Bitcoin is significantly below current levels in 2027 or 2030. So that is a known risk with a known timeline. Price it accordingly. Fourth, a software business that most people are valuing at zero. It's not zero. It's $490 million a year in revenue, growing subscription, and a real enterprise AI product. It doesn't move the stock, but it serves the debt while Bitcoin does what Bitcoin does. The question for you as an investor is not whether strategy is a good company. It's whether the combination of those 4 things at this price in this macro environment represents the value that the market will eventually recognize. I'm not going to tell you the answer to that. That's your decision to make with your own capital. What I will tell you is this: the time to understand an asset is when it's down 72% and the world is in turmoil, not when it's up 300% and everyone is telling you it's going to 1 million. The charts will tell me when the regime changes, and when they do, I will already know exactly what I'm buying. If you want to follow the institutional volume read on strategy and on Bitcoin, S&P 500, gold, and lots of other instruments every single day, that's what the Cantillon report is for. The daily brief goes out every morning. The IVT terminal tracks what institutions are doing in real time. Link is in the description. If this video gave you a framework for thinking about strategy that you didn't have before, share it with someone who's been asking the same question. And if there's another instrument you want me to break down the same way, fundamentals, capital structure, and what the volume structure is actually saying, drop it in the comments. So until then, trade safe, have a great day, bye bye.